Two coworkers, same office, same job, same salary. On the same Tuesday morning, they're both called in and given the exact same news. Congratulations, you're getting a raise. $200 a month. It's nice. It's not life-changing. It's a car payment. A few dinners. A slightly better phone. They celebrate at the same lunch, order the same food, feel the same small pride. Then each of them makes one tiny decision. So tiny that neither of them thinks of it as a decision at all. And 30 years later, one of them has absolutely nothing left from that raise. Not $1. The other one. That single raise, just that one, is paying his rent every month, forever. Whether he works or not. Same job, same money, same Tuesday. One invisible move. This is the story of the most expensive celebration in the world. And the cheapest fortune anyone has ever built. By the end, you'll know exactly which coworker you've been. And how to switch sides before your next raise lands. Before we follow them, notice one strange fact about raises that almost nobody sees. Think about the day before the raise. You paid your rent. You bought your groceries. You went out sometimes. Covered your bills. Lived a complete functioning life. On your old salary. You have months of receipts proving it. Which makes a raise the weirdest money you will ever touch. It's the only money in your life with no job assigned to it. Every other dollar you earn is already spoken for. The landlord's share, the grocery store's share, the electric company's share. But this new $200, it arrives unemployed. No bill has its name on it. No habit expects it. Your lifestyle was fully paid for yesterday, without it. Which means a raise is pure unclaimed opportunity, the closest thing to free money the working world ever hands you. And what you do in the first 90 days after it arrives decides which coworker you become. Coworker 1 doesn't waste his raise. That's the uncomfortable part. He never feels wasteful. It starts small. The car is getting old anyway, and with $200 extra a month, the upgrade finally fits. A few streaming services come back. The grocery cart gets slightly nicer brands. Lunch gets delivered a little more often. No single purchase is dumb. There's no yacht, no casino, no crypto disaster. Just a dozen tiny, reasonable upgrades, each one costing $20, $30, $40 a month. 90 days later, the raise is gone. Not lost, absorbed. His spending expanded to fit his new income the way gas expands to fill a room. Automatically, silently, completely. Economists call it lifestyle inflation, and it is so reliable it might as well be a law of physics. Here's the proof it happened. His salary went up. And at the end of the month, his account looks exactly like it did before. Higher income. Same zero. Now, was it worth it? He traded the raise for a better daily life. That's a legitimate trade, if the happiness sticks. Psychologists have studied this for decades, and the result is brutal. It's called hedonic adaptation. The joy of a new purchase, the nicer car, the bigger screen, the upgraded apartment, fades back to your old baseline in roughly 3 months. The new thing stops being a thrill and becomes the new normal. Invisible, expected, just furniture. But here's the trap inside the trap. The happiness resets. The bill doesn't. The joy of the nicer car lasted 1 season. The payment lasts 5 years. So run Coworker 1's honest ledger. He spent the raise on feelings that expired in 90 days and locked in costs that never do. 12 months after the celebration lunch, he is exactly as happy as before the raise and exactly as broke at the end of each month. He didn't buy a better life. He bought a more expensive version of the same one. Coworker 2 does something that looks like nothing. The same week the raise lands, he opens his banking app and sets up one automatic transfer, $200, every payday, straight into a boring index fund. 10 minutes, done. Then he closes the app and goes on with his life. And here's the part everyone gets wrong about this move. Everyone assumes it takes discipline, sacrifice, willpower. It takes none. Zero. Because remember the strange fact from earlier. His lifestyle never included this money. He isn't giving up dinners he used to enjoy or canceling things he loves. He's living the exact life he lived last month, a life he already proved he could afford. He will never feel this investment, not once. There is no version of his day that gets worse. Coworker 1 had to adapt to spending more. Coworker 2 had to adapt to nothing. The single greatest wealth move available to a normal person with a normal job is, emotionally, a non-event. So, what does the invisible move actually build? Let's run the numbers you came for. $200 a month into the market's long-term average of about 10% a year for 30 years. The answer, $452,000, nearly $500,000, from one raise, from money his lifestyle never even met. But the raw number isn't the good part. Take our 4% rule. The framework from the staircase episode. 4% of 452 is $18,000 a year, which is $1,500 a month, arriving forever, without touching the pile. If you climb the staircase with us, that number should hit hard. $1,500 a month is exactly level 3, the level where your rent or your mortgage is paid by your portfolio for the rest of your life. Read the whole sentence out loud. One single raise, invested instead of absorbed, eventually pays your housing. Forever. That's not a savings tip. That's a cheat code hiding inside a Tuesday. Now zoom out, because here's what turns a cheat code into an empire. Raises repeat. A normal career hands you a raise every year or two. Each one arrives the same way. Unemployed, unclaimed, invisible to your current lifestyle. Which means, every couple of years, life quietly asks you the same question it asked our 2 co-workers. Absorb or automate. Say you only captured the next 3. 3 raises, $200 each, $600 a month flowing into the machine. 30 years at the same average. About $1.35 million. That's more than the $500 a month machine this entire series has been built on. Assembled entirely out of money you never once felt leaving. This is the secret of almost every quiet millionaire you've never noticed. They didn't budget harder than you. They didn't suffer. They just never met their raises. The money went from employer to investment without ever touching the part of the brain that spends. You can't miss what never said hello. Quick honesty break. You know how this channel works. First, the usual. 10% is the market's long-term historical average, not a promise. Your 30 years could land higher or lower, and the ride will be violent either way. Second, $200 a month is a rounded after-tax stand-in. Your raise depends on your salary, your taxes, your country. Smaller raise, smaller numbers. The ratio is what's bulletproof, not the dollar signs. Third, and most important, not all lifestyle inflation is a crime. Some raises should be spent on a shorter commute, on your health, on a kid. Money exists to buy a life. The trap isn't spending a raise on purpose. The trap is absorbing it by default without ever making a decision at all. And fourth, that 3-month happiness reset is an average across studies. Some upgrades genuinely keep paying, usually the ones that buy time or remove daily pain. Notice those are rarely the ones with a logo. One more correction, because last episode we met the thief, and this channel doesn't hide him anymore. $452,000, arriving 30 years from now, will feel like about $245,000 feels today. Inflation takes its cut here too. The $1,500 rent check of the future buys less than it does now. That's the honest version, and you deserve it. But look at what the honest version still says. Coworker 2, in today's purchasing power, holds nearly $250,000 real dollars from one raise he never missed. And the fix for the thief's cut is already sitting in the last block. Invest the next raise too. Each new raise you capture doesn't just add money. It outruns the erosion on the old one. Now write Coworker 1's line on the same bill. 30 years of raises, fully absorbed. Real value remaining, 0. Not eroded to 0, spent to 0. 3 months of new car feeling at a time. Same salary history. 1 rent paid forever. 1 receipt pile. So here's the strange gift hiding in your career. Every year or two, life hands you a fork in the road that doesn't feel like one. a little more money appears. And in the first 90 days, it either becomes your future or your furniture. The move is embarrassingly simple. The week the raise lands, before your lifestyle notices it exists, open the app and automate it away. 10 minutes, you'll never feel it. That's the entire strategy. Win the fight before your brain knows there's money on the table. This whole series has been one machine. Start early, know the levels, survive the first 100K, stop watching, guard it from the thief. Today you found the machine's cheapest fuel, money that was never yours to miss. If you want to see exactly what that $1,500 a month unlocks, and every level above it, the staircase video is next. Your coworker already absorbed his raise this year. Don't be your coworker.